really using math to improve the bottom line boils down to, let's go back and look at the big variables that we looked at just now in the plan, right? You've got your goods sales, your margin on goods, your fees, and your overheads. Let's look at all those areas. In the fee area, this is a really simple illustration that shows a person, remember our $110 30-hour-a-week person, they were only billing 70% of the time. What if they improve that to 75% of the time, which is only an hour and a half a week, right? At 70% of 30 hours, they're billing 21 hours a week. If they improve that efficiency by 1.5 hours a week to 22.5, $7,000 improvement in the fees. How do they do that? They do things like deploy good systems, have a good way of keeping on top of tracking your time and knowing what's going on so that you can find out where the leakage is. Where is that, supplier relationship that's not really working out, because when you look at it, you find I'm actually spending way too much time on this stuff. So only by tracking time and having a good system to do that can you find that out. The point here is what a small change that is, but what a big impact. Similarly, just look at an increase in your fee by $10 an hour. $10 an hour, small change, $9,000 across the year. And that's for someone who's really still only billing at 70%, right? And 30 hours a week, so 21 hours of billable a week. If you put these two together, $17,000. So small changes really add up fast. Fees are a big area where things can change. The next big area besides fees is your margin. We talked about it before in planning, and I showed you a little bit about the impact. Now, how do we improve the margin? We want it to go from the left side to the right side. This is a little bit of detail, but it's actually quite simple. Let's say this is, these are the same thing. It's something like a chair. Let's say it's Kimberly's turquoise and black chair. There's the black one, there's the turquoise one. $4,000 chair. Well, maybe it's a sofa. Anyway, one of them has a discount of 20, and the client discount is shared in both of these cases. See, it's 10 there, it's 25 there, 50 off there. It's just showing the outcome of the same item. $4,000 item, you could be making a margin of 11, you might be making a margin of 33. It's a big, big difference, mainly depending on the supplier terms. So your profit margin is a direct function of your cost terms and your selling terms. This shows you what the cost terms do for it. And in this case, by the way, too, this is probably a result of using a trade-only wholesaler instead of a retailer, in the case of a sofa, something like that. But notice that the client is also better off, and there may also be other factors, obviously. I'm just focusing on the math, but there may even be quality improvements and other things that you can think about. Everybody's better off. So basically this shows that if a business was to tilt a little bit more of its sales in favor of higher margin goods, that's obviously a good way to improve the margin. The other side of the margin coin is the selling terms. Here's a really simple situation where there's only 10% off being offered. It's a retail item, obviously, 10% off, that's it. One designer is sharing that, the other is not. So the client price includes a 5% discount here, it doesn't there. So maybe there's just a different contract term or selling policy term where one company operates splitting discount all the time, and somebody else says, well, I split discount, but only if it's over 10 or something like that. And it seems really petty and small, but look at the difference, 4.7. So this adds up across the year. If you do this on a lot of different projects, then maybe your margin moves from 14 to 17. Maybe it's not 20, but 3 points on $300,000 is $9,000. So who doesn't need $9,000? And don't forget, by the way, you need to look at doing these things because you're in a business where nobody's, as far as I know, paying for a pension for you or a health plan for you, right? So maybe you need to do this for those reasons, or maybe it's just you need a family vacation or something, but there's ways like this that you can tweak your bottom line. This pretty much says it all in terms of the gross margin change. This is the power of the gross margin change. Depending on what your sales are, let's say you're in the middle of this slide, 300,000 is your annual sale of product going into client jobs. You can improve the margin by 3, it's $9,000, and so on. What if your sales are really big, 600,000? Maybe you can move it by 4 points, $24,000. So this is a really big lever that you've got here. And how do you do it? Well, you need to think about, you need to understand your supplier relationships, who are you buying from, that's probably the biggest thing, and what are you specifying. But the other really, really critical thing on this is you need to have good systems and good procedures during the proposal stage, especially. Doesn't matter how you do it, but during the proposal stage, you need to know, as you're building up goods for proposal, what is the margin on this stuff that I'm proposing, and how is it averaging out? That's the tricky part for most people. Any item in isolation, you can easily look at it and say, yeah, it's 11%, it's 15, it's 18, and you may have a gut feel for where it's averaging out. But you're much better off to have a system like this one, where as you're building items to propose, you can see high margin things there, low margin items there, lower margin items there. The system just tells you it averages out to 23.5 at the bottom. So you really, if you want to move the needle on your margin percentage from say 15 to 20 or 16 to 22, this is the way to do it. Make sure that you know who you're dealing with and monitor it well as you're doing proposals. We've now looked at the two big levers, fees and margin. And those are the biggest, fastest ways of improving your bottom line by examining those things. And I take this pause just to say, take some time out of the day-to-day running of your business. Everybody's so busy with the minutia of day-to-day stuff. You have a lot of calls to return, a lot of emails, a lot of stuff going on. You need to find some time now and then, a couple times a year, to just back up and look at the business this way, just in its big segments, the big elements, right? And think about how you can organize your numbers to be a little bit better. You're doing the same amount of work all year, but your bottom line's 20, 30, 40,000 bigger. This is a small company example I'm using, right? 150 in sales and 100 in fees. Maybe that's not too small, but we saw through some small changes here, that bottom line can go up by at least 40,000. So that's a pretty big change. Now, there are other ways of looking at improving the bottom line as well, and I'll just mention a couple of those. Operating expenses are easy to forget once you're incurring them, but you should look at them once in a while. Obviously, if you can avoid some, avoid them if you don't need them. But recovery is the area I'm mainly interested in. A lot of firms do incur a lot of costs that simply fall into what I call general operating or overhead costs that really belong in projects. They really belong with your client. And the reason people don't do that very often is they tell me it's too awkward, it's too complicated to track it and bill it, so I just increase my rates or something. Well, I would say someone's paying you your rate, they're paying your rate for your design expertise. They're not paying a higher rate so that covers shipping or something. You should be billing back the cost of shipping. And so it's all about implementing a process to make sure that you can keep track of those incidental costs like shipping and Home Depot trips for light bulbs and all this various stuff. You should be keeping track of that. I know of one case of a designer who looked back at a full financial year and found that recoverable costs like this that were slipping through the cracks were around $7,000. I don't know what it is in your guys' case, but it can add up to be a lot. So investing some time and some money in changing how you do things can really pay off on that front. So, of course, policy and procedure is always something that can help you save money. It's very, very boring. Nobody likes to think about it very much, but I think Kimberly can attest to this fact too, because she uses it a lot in her office. But when you figure out how to streamline things and operate more effectively by having rules, and then you can save yourself money that way too. The last one is income taxes, and I'm not putting this up to have a long chat about income taxes, but I know that in a lot of small business cases, you can be better off by incorporating, and you may want to have a chat with your chartered accountant, probably, not, or someone who has the expertise in income tax. You probably want to have a look at that. You might find that you can be in a better position, but it's very personal, it's very unique, and it's not for everyone.
I have a question.
Yes.
How can we not pay income taxes?
How can you not pay income tax?
Yeah, because that would help our profitability.
I'm not
like
sure.
a
I think
lot.
you have to move to another planet or something. I don't know.
All right. Can we talk at some point about we should talk perhaps at Business of Design about income tax, because it is kind of, it's overwhelming and they're so darn big.
Yeah, well, income taxes...
I know you don't have time today, but I'm just saying that's a good topic.
For most businesses, the income tax rates are personal tax rates because the business income you generate if you're a sole proprietor is taxed just like employment income, but you have the benefit of all the expense write-offs. So what's left is taxed at personal tax rates, generally, right? That's what happens. But if you incorporate, you get the benefit of very low income tax rates on the earnings in the corporation, but in order to get that money into your hands, you have to pay it out, and then it becomes taxable in your hands. So that's why the incorporating scenario gets a little bit complicated, because there's two levels of tax, and that's why you have to examine it person by person. But a lot of you may find, depending on your province and the tax rates in the province, that the sum of two taxes is better than the sum of one, especially if you're in the position where you're actually saving money in the company, because then you can pay the low rate of tax in the corporation and save the rest. If you don't need to pay it out to yourself right away, then you're not taxed on it right away. You can save it for a while. So those are the other areas that you can look at. So really the summary about improving the bottom line then is this. You can look at taxes, you can look at operating costs, especially the recoverable ones. I would say that's where the easiest low-hanging fruit is. Look at your structures and procedures and get better systems in place, better procedures, better process. I mean all procedures that way. But really the two big ones, manage your margin on product. Look at your pricing policy, look at your trade discounts, look how you supply things into products. And again, even if you're a person who gives all the discount on, look at your admin fee. It could be that simple, because the admin fee you charge on cost is essentially your gross margin on goods. That's what it is. It's that business segment for you. And look at your fee structure. Look at your billing percent, especially. If you can do anything to improve your billing percent, it adds up. It adds up fast. So I would say definitely about billing percent. If you can employ better systems, better time tracking tools, then not only can you move, like in our case, from 21 hours to 22 and a half, an hour and a half a week, but even better than that, if you're tracking time properly and effectively, I think it was you, Anna, yesterday who said, now that I'm doing that, I actually bill $400 or $500 a month more than I would have done when I'm not tracking my time. So it's not only about efficiency, it's just about having an easy way to do it. So systems and procedures, having a good way to do it helps you right there. Really, that's the end. So I was a little bit nervous coming into doing this because, Kimberly said, let's, come on, Dean, do something about designer math. And it all stemmed from a conversation we had last summer about percentages, markups and markdowns. And I thought, okay, I'm going to try to explain all that. And anytime you get into numbers, it's a bit nerve-wracking, but hopefully I've been able to make a few things clear for everybody without overwhelming you with too many details, and basically just convinced you that making a plan is a good investment in time. Don't put a lot into it. You'll get better every year. Just do a simple plan. It's definitely worth backing up from the day-to-day and looking at that once in a while. And use a good contract, have good operating procedures, and employ good systems so that you can track all your time, which helps in many ways. Your billables, it helps you identify problems on the supply side that help your gross margin anyway. And a good system helps you manage the whole supply chain, proposal process and orders and everything. So